Welcome to this week's look at the state of the New York City real estate market. This is for the week of January 8th to the 13th. We're going to get started with the luxury market, then we'll take a look at the Manhattan market, then the Brooklyn market. Then I'm going to sum it all up, give you my thoughts and my takeaways. As always, if you have any questions at all, please post those below, or you can always reach out to me directly at Sotheby's. There were 21 contracts signed last week in the luxury market. That is 4 more than the previous week. 4 of those were for properties that were priced in the trophy category. So those were properties that were priced at $10 million and above. As always, condos outsold co-op 17-3, and there was one townhouse. And actually, we're going to talk about that townhouse because it took second place for the number 1 and number 2 spots. So the number 1 contract was Penthouse 26 at 500 West 18th Street. It was asking $49 million. It was reduced from its original price of $65 million when it first started marketing back in 2018. This is almost 7,400 square foot apartment. It includes 5 bedrooms, 6.5 bathrooms. It has a wraparound terrace of a little over 4,800 square feet. It has a 42 by 50 foot great room. It has a 24 by 36 foot family room, dining room that open onto a terrace, and the terrace has gorgeous Hudson River views. This is a new development. We have talked about this building before last year. It is called One Highline, and the amenities include a fitness center, 75-foot lap pool, spa treatment rooms, golf simulator, children's playroom, private dining, games lounge, garage. And as you might recall, the services are offered through the Faena Hotel. It's all part of this rebranded project. So on to the number 2 contract now, which is not part of a new development. This is the townhouse I was referencing at 8 East 63rd Street. It was asking just under $28 million. It has been on and off the market since 2019. It started as high as $35 million. It cycled through 3 brokerage firms. It is 25 feet wide, 5 stories, made of brick. It has a little over 9,400 square feet. It has been divided into 2 apartments and a dentist office. Has an elevator. Has almost 12-foot ceilings, 6 fireplaces, and 3 terraces. Lovely property. Be interesting to see what the new buyer does with it. It'd be really splendid if they returned it back to a single-family home, but remains to be seen. So let's take a look at those stats for last week. The total weekly asking price sales volume, $208,160,000. Average asking price, $9,912,381. Median asking price, $5,950,000. Average discount from original ask to last asking price, 12%. Average days on the market, 845. That's it for the luxury market. Nice to see that little pop in activity for the luxury market. We're going to now take a look at what's going on in Manhattan and Brooklyn. As I said before, if you have any questions at all, please post those below or reach out to me directly at Sotheby's. We saw a little pop in the supply in Manhattan. 285 properties came on the market. That is up almost 73%. Contract signed, also a little pop, almost 17%, 162. The off-market properties dropped a bit, 16%, 198. Likely people are starting to think about getting those properties back on the market now that we have the holidays behind us. If we look at the 1-month look, we see the supply is still down, this time over 11%, 618 for the month. Contract signed 629, down almost 12%. Off market 782, down almost 8%. We're in a low liquidity environment, as we've been talking about, but we can also see that we continue to be that we are in a low supply environment. Not so surprising this time of year. We'll talk more about that when I wrap things up. But if we look at the market pulse, I mentioned low liquidity. You can see we continue to be in a buyer's market, but you can also see that the tail end of this chart, we're starting to see things trend up because we continue to have very little inventory and we continue to see a little bit of a rise in contract activity. If we look at this liquidity pace chart, this 30-day moving window, 629, it is up from last year, a little over 8%. It's down from last month, a little over 7%, but remains to be seen where things are going to continue to go. It's still early. We expect things to be a little sleepy this time of year. One chart that I am kind of excited about because I mentioned it last week, and I'm really excited to see this data coming in, wondering about this spread between renovated versus unrenovated properties. We see that the spread is shrinking a little. In last we heard in 2023, the spread was about 30%. We see now that that spread has shrunk a bit. It is down closer to 21% now. That's a really nice thing to be seeing. I think that will help the sellers that have been very frustrated by this market if they have properties that need a little work, or maybe they need a lot of work, but especially those properties that haven't even needed that much work, they were getting really hammered last year. So if this continues, this could be very good news for those sellers. Buyers, it may not even be totally bad news for you. Again, I'll touch on that at the end of this report, but for now, I wanted to share this chart with you. Okay, that's it for Manhattan. We're going to move on now. Take a look what is going on in Brooklyn. If you have any question about any of the things that I just shared with you about Manhattan, please do post that below or reach out to me. So just as with Manhattan, you see there was a little pop in the supply in Brooklyn. 160 properties came on the market. That's up a little over 11%. You saw a little pop in the contract activity as well, 108, almost 26%. Off market also falling a little over 51% at 85 properties for the week. Stepping back and looking at the month, look, we see supplies also down in Brooklyn. 442, that's down a little over 19%. Contracts signed also down a bit, almost 16%. 422 off market, up a bit, almost 36% at 396. No big surprises here with these Brooklyn charts. Looking at the market pulse chart for Brooklyn, just as with Manhattan, we see that Brooklyn continues to be in buyer's market territory. What's different, however, is that unlike Manhattan, we see this chart going down further into buyer's market. What does that mean? We don't know. It's a little too soon to tell. Still early days of the year, and we do have the spring market just around the corner, and we could see things change very quickly or not at all. We'll have to wait, keep an eye on it. If we look at the liquidity pace, we know that Brooklyn is also in this low liquidity state, 422, up from almost 8% from last year, down a little over 11% from last month. That could be accounting for the chart moving downward, no doubt it is. The spread in 2022 for renovated versus unrenovated was definitely higher, 15%. We saw a pullback, and we see a continuation of that pullback. The spread is diminishing, so that is really good news, but there is still a bit of a spread, and so those properties, those unrenovated properties in Brooklyn, will continue to see challenges, but perhaps not quite as much of a challenge as they saw in 2022. Remains to be seen. We'll just have to keep an eye on this in 2024. That's it for Brooklyn. Any questions, please post those below. I'm going to wrap it all up now, give you my thoughts, my takeaways, and my recommendations for buyers and sellers. So there were 21 contracts signed in the luxury market. 4 of those were in the trophy category. 17 were condos, 3 were co-ops, 1 was a townhouse. 11 of those were uptown, 10 were downtown. Probably half of those properties were for new development. The other half were resale. So it was a nice little pop in activity from the previous week with 4 more contracts being signed than the week before. In the Manhattan and Brooklyn markets, we continue to see overall low supply. It's going to likely continue to be like that until the end of this month. We're going to probably start to see more inventory coming on. We did see a little pickup in both the Manhattan and the Brooklyn markets for the week. However, overall, just not a lot of new supply coming on, no surprise there. And with regard to the demand or contract activity, we saw a little pickup in activity for the week in Manhattan, but overall, contract activity remains relatively low, up from last year in both Manhattan and Brooklyn, but kind of down from last month. But still early, spring market's around the corner. Let's continue to see where the contract activity goes, see that when these buyers start to re-engage. One really nice piece of news is that we see that the spread between the renovated and unrenovated properties is looking like it is shrinking. Use that word because it's a good word for it. And that's a good thing. I think that will help the resale market a bit and will help those sellers that have been frustrated or certainly were frustrated last year by the pullback of the buyers with regard to properties that needed some work. Sellers, what does this really mean to you? Well, the chart that I just mentioned, that kind of data should be of interest to you, and hopefully that will mean good things for the spring market for sellers. Also, if you are not currently on the market, historically, March is the best market to list. So if that works for you, you might want to be planning for that. If you want to come on a little bit sooner and the market looks like it's waking up, then why not? But certainly by March is a very good idea. Why? Because March, April, and May are our best months, and you want to give yourself the longest period that you possibly can to take advantage of the spring market. Something to note, if you put your property on the market and you don't get the activity and the offers that you want in the first, let's say, 30 days of being on the market, it is almost always your price. So if you are a serious seller and you want to make a deal in the spring market, do not wait around thinking it's going to get better. Adjust your price. To recap that, if you've been on the market 30 days, 40 days, you're not getting the offers you want, not getting the traffic you want, it is your price. Make an adjustment. Don't wait around. You don't want that spring market to slip right by you. So put your property on the market in March, take advantage of April and May. If you need to make an adjustment, do it sooner rather than later. If you're currently on the market and you are getting offers, try to work with those buyers. If you can live with the numbers that you're getting, try to do it. The longer you sit on the market, the less your property is worth in the eyes of the buyers. So it won't get better for you the longer you wait around. Buyers, this really is your moment of opportunity. This also could begin to diminish in the coming weeks as we start to see more inventory come on, more buyers engaging. It definitely will create more competition for you. The market is going to get a little frothier, and you may find you don't have as much leverage. So if you see something that you like, then this could be a really good market for you. This is very likely it for the inventory for the moment, probably until the end of the month. You'll probably start to see more things coming on in February, certainly by March. So if you don't see something that you like now, then you can just wait. Again, for you, with the chart that I mentioned, this renovated versus unrenovated, the thought for buyers is, as this spread is beginning to shrink, this could be a very good time to take advantage of this current spread, because if it continues to shrink, you could pick up a property that at this higher discount, let's call it that. If you find a property where the seller really needs to sell and they're willing to work with you and take a bigger discount for that renovation that needs to happen, and know that you got really good value, because down the road, there may not be as much of a spread. I hope that's clear. All right, that's it for this week's look at the state of the New York City real estate market. As always, please post your questions below or reach out to me directly at Sotheby's. And as always, I want to thank Urban Digs and the Olshan Luxury Report. The work they do helps me to help you to make great decisions. Normally, I would tell you that I will be back next week with the very latest news about the state of the New York City real estate market. However, I am going to be taking a little hiatus, so I will be back in a few weeks, and I will absolutely be bringing you the very latest news, as I always do, about the state of the New York City real estate market. In the meantime, take care.